Microsoft just proved the enterprise AI boom is real. 40% Azure growth, $37 billion in annualized AI revenue. That number alone rewrites how we think about this space. But today's briefing doesn't stop there. The most consequential AI lawsuit in history enters week 2, with $150 billion and the future of OpenAI's governance on the line. Anthropic quietly launched a cybersecurity model that's already meeting with the White House, and Google's Gemini just rolled into 4 million cars. This is the daily alpha for May 1st, 2026. Let's get into it. Microsoft just delivered the clearest proof yet that enterprise AI spending has become permanent infrastructure. Azure grew 40% year over year, beating analyst expectations, and the company's AI business, spanning model builders on Azure and the full Copilot suite, is now generating $37 billion in annualized revenue. That's up a stunning 123% year over year. Total quarterly revenue came in at $82.9 billion. For investors, the critical signal here isn't just the number, it's what it represents. Enterprise budgets are no longer treating AI as a pilot program. With over 20 million paid Microsoft 365 Copilot seats and a new Frontier Suite tier launching today, Microsoft is building a durable AI revenue moat that compounds. The company did raise CapEx guidance to $190 billion for the fiscal year, citing soaring memory costs. Watch that figure closely as the market prices in the infrastructure burn rate across hyperscalers. The most consequential legal battle in AI history just entered its second week, and the stakes could not be higher. Elon Musk is suing OpenAI, CEO Sam Altman, and President Greg Brockman for $150 billion. Alleging they looted a charity when they transformed the company from a non-profit mission into a commercial juggernaut now valued at $852 billion. Musk's testimony wrapped on day 4. Prediction markets currently place roughly 40% odds on a settlement, which tells you the outcome is genuinely uncertain. What matters for investors is what happens in Phase 2, beginning approximately May 18th. Judge Gonzalez Rogers will decide alone whether OpenAI must restructure. If she rules against OpenAI, the legal template she sets could reshape how every major AI lab organizes itself. For portfolios with exposure to Microsoft, Amazon, or SoftBank, all deeply tied to OpenAI's trajectory, this courtroom is the macro risk to watch. Anthropic just raised the stakes in enterprise cybersecurity AI with the quiet launch of Claude Mythos Preview, a general-purpose model with exceptional capability in computer security tasks. This wasn't a broad consumer launch. Anthropic paired it with Project Glasswing, a targeted initiative to deploy Mythos specifically to secure critical global software infrastructure. Initial access is limited to vetted industry partners and open-source developers. CEO Dario Amodei personally briefed White House Chief of Staff Susie Wiles on Mythos's implications. Simultaneously, Amodei published a landmark essay warning that within 1 to 2 years, the world will face what he called a country of geniuses in a data center, and that the window for thoughtful governance is closing fast. For investors, Mythos positions Anthropic in the fastest-growing enterprise AI vertical. Security. As breaches proliferate and regulations tighten, AI-native security tooling commands premium pricing. Watch for the broader commercial release and any announced enterprise security partnerships. OpenAI closed the largest private financing round in the history of venture capital, $122 billion at an $852 billion post-money valuation. Amazon led with $50 billion. NVIDIA and SoftBank each contributed $30 billion. The company now serves 900 million weekly active users on ChatGPT and is generating $2 billion in monthly revenue. But here's the tension investors need to understand. CFO Sarah Frier has reportedly raised internal concerns that revenue growth may not keep pace with the aggressive infrastructure spending, and OpenAI's own models suggest the entire $122 billion could be burned through within 3 years on computing contracts alone. That's not a fatal flaw, but it is a real signal. For investors with NVIDIA or SoftBank exposure, OpenAI's scale is a tailwind. For those tracking the AI monetization thesis broadly, watch the CFO-CEO friction. It often surfaces before a strategic pivot. Revenue parity between enterprise and consumer is projected by end of 2026. Google just made Gemini part of daily life for millions of drivers. Beginning April 30th, Gemini is replacing Google Assistant across approximately 4 million General Motors vehicles, model year 2022 and newer, spanning Cadillac, Chevrolet, Buick, and GMC. Polestar began its own Gemini rollout the same day. This is one of the largest single consumer AI deployments in history, and it matters strategically because the car has historically been a locked ecosystem for voice AI. Google just cracked it open at scale. For investors, this is about distribution. Gemini now has a daily driver use case with a massive captive audience before Google I/O 2026 on May 19th and 20th. At that event, expect Gemini 4, Veo 4, and a confirmed Apple-Google AI collaboration to be unveiled. Alphabet's ability to embed AI into automotive, mobile, and search simultaneously gives it a distribution advantage that pure-play model companies simply cannot match. Watch the I/O keynote on May 19th. Today's dominant theme is unmistakable. AI has entered its monetization phase, and the infrastructure arms race is now structural. Microsoft's $37 billion AI run rate, TSMC generating 61% of revenue from high-performance computing, and OpenAI burning through capital at unprecedented speed. This is no longer experimental. The question isn't if AI will reshape portfolios. It's which layer of the stack you're positioned in. If today's briefing gave you an edge, subscribe to the Daily Alpha and follow us at @TheDailyAlpha. We'll be back tomorrow. This is the Daily Alpha.